Hi, this is Chuck Hughes. In today's video, we're going to take a look at my high accuracy trading programs. Over the past 4 years, we've experienced an incredible amount of turmoil in the financial markets. We've had a severe recession and bear market, high unemployment, increased market volatility, and a very uncertain economy. This financial turmoil has made it very difficult for the average investor to realize a consistent return on their investment. Despite these difficult market conditions, my high accuracy trade selection process for stocks and options has produced over $4.4 million in actual profits over the past 4 years. My brokerage account statements show $4,430,000 in profits with an average return of 58.6%. Now, there was a total of 422 winning trades and 21 losing trades, resulting in 95% accuracy. So these real-time results demonstrate that it is possible to achieve consistent returns regardless of market conditions. Let's first take a look at my high accuracy trade selection process for stocks. I use a 3-step trade selection process to select stocks with the best profit potential. The first step is we want to determine the price trend, and I use 2 trend following indicators to determine the price trend: the 50-100-day EMA system and the major trend system. Now, once we determine the price trend, the next step would be to confirm the price trend, and I use several trend confirmation indicators such as on-balance volume, the new 52-week high list, price level confirmation, and leading industry group. And once we confirm the price trend, the third and last step is we want to select a low risk entry point. And I use the Keltner channels to select my entry points. Now, this is very important in volatile markets. You want to select a low risk entry because when there's wild price swings, you could easily get stopped out of your position. So the low risk entry helps prevent you from getting stopped out of your position and can result in very high accuracy trade selection. Let's take a look at one of my stock portfolios. I use the 3-step high accuracy trade selection process to select the stocks in this portfolio, and this portfolio has a $276,000 open trade profit. And you can see in this portfolio I have stocks such as Apple, Baidu, Caterpillar, National Oil Well, and I also have some ETFs in this portfolio, such as the oil and gas ETF, NASDAQ, small cap, and materials ETF. So the trade selection process can also be used for ETFs. I also have a high accuracy trade selection process for stock options. And the first step in this process is we want to determine the price trend and then use our trend confirmation indicators to select a stock that's moving up in price. And the second step in this process is to use historical price data to select option time length with high accuracy. And the third step in this process is we want to purchase in-the-money options with low time value. Now, step 2 and step 3 are just as important as step 1. Because there's so many options to choose from. For example, if you were going to trade an option in Baidu, you have over 750 options to choose from. So step 2 and step 3 helps us select options with the best profit potential. This is a snapshot of one of my option portfolios, and I use the 3-step trade selection process to select these options. And this portfolio has a $254,000 open trade profit and an average return of 114%, and all trades are profitable. If I purchase an option and the underlying stock moves up in price and the option appreciates in value, I normally will at that point sell another option to create a spread with my existing option purchase. For example, I'm displaying two brokerage confirmations. These were for Apple options that I purchased several weeks ago. And the top confirmation shows that I purchased the Apple October 345 strike call for 28.17, and that was on July 8th. Now 11 days later, I sold an Apple October 375 call for 24.55. So this created an option spread which has several advantages over an option purchase. As I just mentioned, option spreads have several advantages over option purchases. Option spreads allow us to increase the profit potential of our option purchase. And in the example just presented for Apple, creating the spread increased the profit potential of my option purchase by over 100%. And the option sale provides downside protection, as the short option will increase in value as the price of the underlying stock declines. And option spreads reduce the overall risk of your option purchase. And also, this is very important, the option spreads allow you to maintain your position during volatile markets. And this has been very important during markets where we have wide price swings. So the short option protects us if the stock goes down in price. And lastly, spreads can be profitable if a stock goes up or down. This call option spread analysis calculates the profit potential for the Apple call option spread just mentioned. And the calculator will calculate the profit potential for the spread over a range of prices for Apple stock at option expiration, from a 20% increase in Apple stock to a 10% decline in Apple stock. And we can see from the analysis, if Apple stock increases in price, the spread has a 728% return potential. If Apple stock remains flat, the spread has a 728% return. And if Apple stock declines 10%, the spread has a 281% return. So you can see that it is possible to profit with option spreads if the stock goes up or down. This is a snapshot of one of my option spread portfolios, and this portfolio has a $118,500 profit and an average return of 99%. And I circled the first spread trade. This is for the Cameron 65 and 90 strike call options. And the long 65 strike call option, symbol CAMAM on the first line there, has a $27,657 profit. And the short option with the symbol CAMJR has a $10,026 loss. So normally with the option spreads, we net out the difference between the long and short option. And in this example, this spread has a $17,600 profit. I use my high accuracy trade selection process to make trade recommendations for my Inner Circle advisory service. And I'm displaying the current open trade profits for the advisory. We currently have an average return of 86% for the 6 portfolios and 99% winning trades. So you can see that the high accuracy trade selection is doing very well this year. If you'd like to get the updated profit results for the Inner Circle Advisory, just log on to chuckhughesic.com and click the trade results page. This is Chuck Hughes. I want to thank you for listening today, and I wish you the best in investing success.